industry, and the advisory firms that I work with, same thing.
And the demands of the clients that you all work with, and then just your fight for talent, what does it tell you about kind of the broader economic outlook?
Yeah, I'm definitely not the economist.
No, I
in the
know,
group,
I know. No, but these are like important
interesting-
factors.
Yeah, absolutely. I think, with these students that are coming out of programs, there's enough jobs for all of them. And even in a recession, that's a time where end investors, you and me, need our advisors more than ever. So it's up to the advisors to be creative, to think about the profitability of their firm and how they're structured. That's a lot of the work that we do on the business consulting team here. But there's always going to be jobs. There's always going to be growth.
Amazing, yeah.
So it's not, it's not a recession-proof thing. It just shifts and changes a little bit as the markets change. And there's constantly new opportunities being created.
Does AI just make this even crazier?
So we've got a couple of firms that are starting AI. So actually, we were just talking about this with one of our firms last week at a different conference, and her next hire is somebody to do AI for the firm. Not because they know what they want to do, but they know they need to do something.
Right, and they don't want to be left behind, right?
So
just to check it out.
Yeah.
What a pleasure.
Lovely to see you.
So good and great to attack both of those worlds. They definitely tie together. Lisa Crawford, she's director and head of business consulting at BNY Mellon Pershing, joining us here on site at BNY Mellon Pershing Insight Conference. You are listening and watching Bloomberg Business Week. I'm Carol Massar here in Orlando. Of course, Matt Miller back there at Bloomberg headquarters in New York City. We do want to get a check on world and national news. Up to Nancy Lyons we go. She's in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Carol. Golf's U.S.-based PGA Tour and the Saudi-backed breakaway Live League have agreed to join forces. Bloomberg's Simone Foxman has more on a deal that could end their feud.
We understand that this comes potentially with the possibility for future Saudi investment. Also, that members of both the Live board, which is mainly backed by Saudi Arabia, largely backed by Saudi Arabia's public investment fund, that's their main sovereign wealth fund, will also join the members of the PGA Tour on this board. And they're sort of still kind of figuring out what the details are.
Bloomberg's Simone Foxman says the new Live League that started last summer led to several lawsuits, and this merger apparently ends those legal battles. Secretary of State Antony Blinken plans to visit China in the coming weeks for talks with top officials there, possibly including President Xi Jinping. Bloomberg's White House reporter Justin Sink says the visit could possibly lead to renewed conversations between President Biden and President Xi.
I would expect, if this meeting goes well, two possible things to accomplish: setting up that phone call between Biden and Xi, and secondly, the U.S. has really pushed for reopening military-to-military communication, which the Chinese cut off after former Speaker Pelosi went to Taiwan.
Again, Bloomberg's Justin Sink. A federal judge is temporarily blocking portions of a new Florida law that bans transgender minors from receiving puberty blockers. Judge Robert Hinkle says in his ruling, gender identity is real and the state has no rational basis for denying patients treatment. And former New Jersey Governor Chris Christie has filed the paperwork formally launching his bid for the Republican nomination for president. His formal announcement will take place tonight at a town hall in New Hampshire. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. Choppy tape today. All of a sudden we've got the Dow lower, the S&P holding on to a gain. We've got NASDAQ higher, but the NASDAQ 100 index is trading lower. Stocks are drifting, but again, a lot of volatility. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in a choppy session today with the Dow currently down 13 points. S&Ps are higher by 6. And NASDAQ still climbs by 31. The U.S. 10-year yield at 3.69%. Gold is little change, oil trading in the red. And Bitcoin is surging higher by 5%. Of the main 11 S&P sectors, leaders were the financials and consumer discretionary. Healthcare was under pressure. And leaders to the upside in the Dow, Intel and American Express, while Merck fell 3%. And led to the downside. In other news, Boeing faces 787 delivery delays as a new defect is discovered. And in the crypto space, Coinbase plunged as much as 21% as the SEC sues the company for breaking U.S. security rules. Wrapping things up, Casey's General reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
All righty, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are live in Orlando, and we are delighted to have with us Trey Prescott. He's Director of Business Development at the Atlanta-based Registered Investment Advisory Services Network, and he's joining us live from the World Center Marriott in Orlando at BNY Mellon Pershing Insight. Nice to meet you.
Thank you so much for having me. It's a pleasure.
It's a pleasure to have you here, and you're going to talk to, because it's interesting, we just had a conversation about, investment advisors joining forces. Tell us about what you do, because you really help independents, right?
It's the opposite.
Or advisors go.
Independent. I sit in a very fortunate seat. I get to work with advisors from wirehouse, banks, broker-dealers, and really telling them the best ways to go independent. And if I'm lucky enough, they'll come over to our firm at Advisory Services Network. But we enable them to self-brand, and we take care of all the back office, and they can manage and prospect their book.
So they're kind of independent, right? They stay on their own, right?
They stay on their own.
You're dealing with all their back office.
Yep. So they create the brand, they manage the money, it's their book of business, but they're just aligning that independence through our firm as a member of ASN, and we do all the billing, compliance operations, all the day-to-day minutia that they have no interest in doing.
Why do most come to you?
Most because they hate compliance, they hate operations, they hate billing, they don't want to deal with the SEC, they want to do what they do best, and that's building their book or prospecting those new clients. And unfortunately and fortunately, we're in a great space right now for the independent rep, but most out there, they don't know what's good for them, and they don't know or have a proper education as what's available to them. So a lot come to me, and they'll determine if a fee-based RIA is their best route or if one of the other firms out there, because that's one thing. It's exploding.
I want to bring my co-host Matt Miller in just a moment, but how big has the network gone? Because you said you've been doing this for 13 years?
This will be my 14th year this fall. I did 5 years on the operations team and sales on the other side. So we get to work with a number of different reps. And as of right now, Advisory Services Network's almost $7 billion in about 45 states. And those advisors roughly are a $10 million upstart. Our largest shop's about $450 million. So it's all across the board. And we service a lot of different entities.
Matt, come on in.
Yeah, I'm just wondering if your advisors are then more independent than they would be at, say, I don't know, like Ameriprise or Pru or any of the others like that. What makes them so independent? Do they not have any proprietary products to push?
I can't hear anything from you.
You couldn't hear that question?
I can't hear anything in here.
Okay. All right. So
well, then
we're
take
hoping
off the
that
headphones.
maybe we can
take off the headphones.
No. No, that doesn't. Hang on. Let's just see. Can you hear now?
That is a world of difference right there.
Okay, there we go. Okay, Matt, why don't you ask your question again?
Well, I was just wondering, how independent are these advisors? Because I talked to people from Ameriprise. They also seem fairly independent, and other, and other such businesses. Is there a difference between that and ASN?
There is. They are on our ADV, but they are self-branding as a member of our firm.
What does ADV mean?
ADV is the brochure supplement.
Okay.
Basically, it's stating if they're on our RIA or if they're their own RIA. But generally, I mean, those reps coming over to us, they are looking for an independent space where they can manage the money. They can pick and choose the products. We don't push that type of stuff. We're an independent IA platform, meaning we're doing all the day-to-day minutia of the RIA. So we're not pushing product, we're not pushing brand, and we're not pushing a 5-year, 10-year lockup or upfront money. It's a straight independent service platform for those type of reps who want to create their own brand, sell for the highest multiple down the road, but also maintain that independence and open architecture for as long as possible.
All right, so
I don't know if Matt, you wanted to follow.
Yeah. I mean, how many people are leaving bigger firms to come to you, and where are they coming from? Is there something specifically that they all share, that they all don't like about having to work for, another boss?
That's a very long conversation right there. What I will say is that last year I spoke to 184 groups in total, meaning if you got 10 million in AUM or over, they were generally qualifying us as an independent RIA platform. This year alone, this morning actually, I spoke to my 155th group already, if that tells you anything about the space. A lot of those reps are coming from captive broker-dealer environments, banks, the wirehouse channels. Essentially, most of those groups are on 20 to 60% payouts, and they can never leave those companies anyway. So they come to us, peel as much out as possible, and they really control their own destiny from there because we don't require them to sell internally or externally. They can work with us for however long they want to and sell at their beck and call.
So I am curious about the financial advisors. Since you've been doing this for so long, what are you seeing about the individuals? What are some of the demographics? Are they getting younger? Are they getting older? Are they getting what?
It's amazing how many entrepreneurs there are in the industry. Most people that you think about in our industry are at a wirehouse and with a bear in the bowl in the front of it. A lot of people out there, they want to create their own practice and they want to create their own brand. And that's what we answer for. Demographics wise, look, I'm a family-owned firm, family-owned company. My dad started us 14 years ago as an offshoot from our consulting practice Mainstay. It's getting generational. A lot of advisors are bringing in their sons or daughters to help answer for that next generation of clients, but that also makes it sticky. A lot of reps are liking that. Right now, you may argue with me on this, I see the industry getting a lot younger and a lot more hip as to the technology and tools that are available to them now and going independent. 10 years ago, someone 30, 35 years old probably never thought about going independent. So we're trying to answer for that.
Now, diversity as well?
Diversity as well.
Yeah, go ahead, Matt.
Well, we were talking with Lisa Crawford just a moment ago from Pershing, and she said, if you want to have a really broad, deep, and complex technology offering, then you've got to have, more than 15 people in your firm. Do you disagree?
No, I don't disagree. I mean, look, we're a different type of firm right here in that we are a full-scale RIA. But if you do want to be a single man or woman practice with 100 million under management, you can do it. It's hard.
Yeah.
It may not be the best use of your day dollar and overhead, but you can certainly do it right now. And as long as there's RIAs like us coming out there, more and more advisors are going to go independent.
One of the other things that Lisa Crawford talked with Matt and me about too is, the hunt for talent, the talent wars. What about the talent war for you all in terms of the back office operations, right? That you've got to support for all these registered investment advisors who want to go independent, but they need someone to take care of kind of that stuff.
Well, we're hiring right now. We're looking for 2 to 3 operations, 2 to 3 compliance people. It's a war out there right now. Generally,
are you having to pay up?
We're having to pay up right now, but we're seeing how many 15, 20, 30-year veterans are being let go of their current firms for the younger generation, but that's opening up seats for us to bring on those type of veterans to service those independent reps that we have, which, we typically are. This will be the first year that we're doing an actual internship, but with that, we are looking for those veterans in our industry to help service our independent reps because that's what they expect right now.
Yeah, interesting. Trey, thanks so much for stopping by.
Thanks so much for having me.
Yeah.
I appreciate you guys.
Appreciate it. Trey Prescott, Director of Business Development at Advisory Services Network, here on site at BNY Mellon Pershing Insight Conference in Orlando, Florida. Matt and I are going to continue. We've got just about 10 minutes left in today's trading session. Matt and the team are going to count you down to the close. I'm Carol Master, along with Matt Miller, and this
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word from Reddit that it is cutting its workforce by about 5% and reducing its hiring plans as the startup refocuses on future growth. The online forum operator is eliminating around 90 full-time roles, this according to a memo sent to staff by CEO Steve Huffman and seen by Bloomberg News. Reddit is based in San Francisco. Boeing is going to be delaying deliveries of its 787 Dreamliner aircraft after uncovering flawed parts during production, a setback as the plane maker works to meet soaring demand for its long-range aircraft. Apple shares are lower today by 0.2% after a cool response to the launch of Apple's mixed reality headset. Analysts say the eye-popping price of $3,499 for the Vision Pro headset will limit its mass market appeal. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence, and earlier today he said Meta Platforms will have a fight on its hands with Apple.
For Meta, having invested billions of dollars in developing their own headset, I mean, it leaves them with very little room to be the scale player. Even though they have that 80% share and they have a $500 headset, I would be surprised if they continue to pour more money, because now that Apple has entered, they will lower the price over time. And I think when it comes to hardware, there's no other company that can build better hardware than Apple.
And right now we do have Apple down 0.2%, Meta down 0.1%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. I'm Carol Masser at the Pershing Insight Conference, BNY Mellon Pershing Insight Conference in Orlando. Matt Miller back there in our New York studio. Hey, Matt, you and I haven't had a chance to really talk about it, but it's certainly been a big story of the day, and this has to do with the SEC. Its crackdown on crypto widening out, and it accused Coinbase Global of running an illegal exchange. I mean, this is pretty big in terms of the charges.
It is a pretty big deal. It wasn't entirely unexpected because they have warned that a number of crypto tokens the SEC considers them unregistered securities. And if you take a look at the law, which was written in 1946, it makes a lot of sense. Anyone who's investing in a company or a product with the expectation of earning a profit, that's considered a security. So they brought a suit against Binance yesterday and against Coinbase today. And as a result, we saw Coin, at least, as it is publicly traded, fall at one point as much as 20%.
Yeah, a big, and not surprisingly to see that impact as well. We should point out that our David Weston of Wall Street Week and, of course, of Bloomberg, catching up with the SEC Chair Gary Gensler to talk about this suit and just the impact. Here's what he told David earlier.
What I'm deeply worried about is an ongoing sector of our capital markets that undermines the trust in the capital markets. It's not only that people are losing money in bankruptcies and scams and huckster and flim-flam artists, but it's also about undermining that which really is part of our whole economic success, $100 trillion capital markets.
And that, of course, is SEC Chair Gary Gensler earlier with David Weston. I don't know, Matt, you cover crypto in and out. You do wonder what the way forward is here.
Well, I mean, the interesting thing is that Gensler's asking all of these companies to come into regulation, but they tell us, we do a show every week focused on crypto at 1 p.m. on Bloomberg Television, that they can't. There's no way. They have, a lot of them tried to register and have been refused.
Yeah, so interesting, and certainly more to be known. All right, you are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our colleague Matt Miller. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and those folks streaming on YouTube. Matt, you're alone. Where's Carol? Did she take the day off?
Yeah, Carol, no, she went to Florida. You know, she always goes off and does these conferences. I am not so lucky. Although, you know, it's kind of nice. I can do whatever I want in here. I'm all by myself.
Oh, gosh.
I'm a little bit scared of what that entails then.
You do know you're in a big fishbowl there, Matt. Everyone can see you.
Yes, that's true. Everyone can see me.
And it's glass enclosed.
Yes, and I have a whole very talented and watchful team on the other side.
There
of
you
this,
go. You can see the back of Matt's
but
head there.
but
Matt,
listen,
are you keeping an eye on the markets?
Yeah, there's really, it seems like there's not much going on in terms of the markets, even though there's so much going on in terms of the news, right? I mean, we've got congressional hearings today. You've got the PGA taking money from Live Golf. You've got Gary Gensler and the SEC cracking down on crypto. So there's so much news, but with the exception of Coinbase shares, you don't see a lot of it reverberating in markets.
Right, and in fact, even with the modest move up, we're still just shy of that technical bull market in the S&P 500. Since October 12th, Romaine, the S&P 500 has now advanced 19.84%, so just shy of that 20% mark.
Yeah, barring some big surge here in the next 20 seconds. I don't think we're going to quite get there here. Of course, a lot of folks, a big debate going on out there. I thought an interesting column by John Authors a little bit earlier today, kind of about what this really means and whether this is sort of, I guess, a wolf in sheep's clothing, if you will, when it comes to the bull market. All right, we are getting the closing bells here, and we should point out that stocks, a lot of the indices were oscillating between gains and losses for a good portion of the day, but it looks like all of the headline indices are going to close in the green. The Dow Jones Industrial Average higher by about 10 points. The S&P 500 also higher by about 10 points, or about 0.2%. And as Scarlett just pointed out, that's going to be just shy of that 20% threshold off of that October low. The NASDAQ Composite higher by about 0.4%, but the outperformer in a big way was the Russell 2000, higher by about 49 points here on the day, 2.7% gain on the back of that cyclical trade, as well as a big bid that came back into regional banks.
All right, so in terms of the banks, we do see that financials are the biggest leader in terms of the S&P industry groups. Financials leading, consumer discretionary right behind them, and then real estate. Healthcare, consumer staples, and IT, the biggest losers. So you see investors selling what would be defensive stocks. Do IT stocks count as defensive now?
They have, yeah.
Are those safe haven stocks?
Microsoft is.
Yeah.
It has been. Yeah. The notable thing about today, we go back to breadth. On the NYSE, more than 5 stocks are higher for every one that is down, which sounds pretty broad, but it's only the broadest since Friday, when more than 10 stocks were higher for every one that is down. I'm going to take a look at some individual movers. And Matt, you had mentioned the merger between Live Golf and the PGA Tour. We see Topgolf Callaway as one of the big beneficiaries of this unexpected